Well, SoFi is just carrying my portfolio now, and it's just gone right past its long-term support turned resistance. And like I said in the previous video, everything above this is just fair game. Sky's the limit. Anything can happen here. As long as shorts don't come back with a vengeance or anything like that, they are going to do just fine. And I mean, I really don't understand why shorts are shorting this company with improving fundamentals, great balance sheet, great growing company. I mean, if I was shorting a company, I'd find a company with lowering fundamentals, lowering future guidance, things like that will turn the asset value much lower in the future. But with SoFi, I mean, obviously they had the bubble here, and just with everything going on in the macro environment, like driving the share price down, it's understandable. But from here on out, any shorts taking position is just, it's crazy. I don't understand that. And we can see that in terms of the short interest, it's just mind-boggling how everything increased so much from summer to fall. And this is old data from October 31st, but it's all of these shorts are just in pain right now. Most of them are covering. This is coming down. We'll just have to see. But every dollar that we close on these dates, above on these dates is just going to be more pain for the shorts. So if we can close above 15.50 tomorrow, I mean, this is going to be more pain. So that's going to drive the share price much higher. And out of all the companies, I'm most confident with SoFi. I have no worries about them. It's just been this build up. It's like if you have an inflatable ball and you bring it to the pool and you try to push it down, and you hold it down there for a really long time, pushing it even further and further, what's going to happen? Once you let go, it's just going to come right back up. This is exactly what happened with SoFi. It's just been held down for so long, beaten down all the way, and with the optimism increasing, institutions buying in, well, the shorts are just covering all the way up. So we'll just have to see if they're able to regain this all-time high, right? I don't know if that's going to be possible in the short term, but I honestly wouldn't be surprised if they just keep going further. At the same time, I'm just expecting some consolidation from here, slow uptrend, and whatever happens, happens. And we also have to remember that in terms of the small caps, they still have a lot of room to grow, because small caps are so behind the S&P 500 that it's just been a no-brainer buy for me the past year. I've just been increasing my positions in all of these, and we can see that all of these small caps are just doing fantastic. With Rocket Lab and Intuitive Machines, I'm super surprised that they haven't come back down, honestly, because usually when we see this huge increases, we see a lot of profit taking, and we did see some, but they've just been bought right back up. We'll have to see how these companies do. The thing is, the stock market is very forward-looking, so they care about the future of these companies, and the future of these companies in particular are very, very bright. We'll have to see if they do anything similar with ASTS, like a kind of consolidation, coming back down to good buy zones, because I personally am going to be buying more ASTS for sure. Well, LAC, Lithium Americas Corp, we did see this huge, run up and then a massive, violent shutdown of the stock, just coming back down to the 2s and 3s. We might see something similar again, but I wouldn't bank on it because of the assets that they have. We have to remember that when we buy into these companies, we're buying into their assets, we're buying into their future value, and they have a market cap currently of 800 million. So with 800 million, you're buying all of their assets, their mine, everything that they have built so far, as well as their $2 billion loan from the US government. I highly doubt the government is just going to invest in this company, give them the loan, and they just fizzle out, right? Especially with something as important as lithium, to control that within our country, well, I think that they have a very bright future ahead of them. This may have been the bottom, and we just see, some profit taking here and there, going back up, profit taking, and we just see a slow uptrend towards their inevitable mine operation in 2027. We might see an expediting of their mine operations into 2026, or we might see them delay the mine opening into 2028. But but my point is, either way, it's still within the realm of the next 5 years of them opening. And either way, we're still going to see them open. But my point is, either way, we're going to see them open within the next 5 or so years. And they're going to be profitable and just pumping out lithium for the US economy. Celsius, I'm basically flat on them now because of the recent run-up. But I'm not banking on them to stay. I think it's personally fair value, but we'll have to see what the market thinks, which is more important than what I think. ELF is really confusing because there was a short report that came out that tanked the stock yesterday, and now they're all bought up. So I don't know what's going on. I didn't read the short report because I know this company is great. It's just more drama, I think. I don't know what's going on, so I'll have to read up on it and see if it's warranted. Yeah. High Tide, though, I am buying a lot more High Tide because of their fundamentals and improving future guidance. So I can do all the analysis I can on this stock, and for me, I have an $8 price target for 4 years ahead, and that's definitely going to beat the market. But we have to keep in mind that companies like this, in their early stages, they dilute shareholders immensely. And that's very, very common in this industry, very common in growth stocks in general. So no matter what I do, I'm never going to be able to price in the dilution that they're going to do. So I just take, 50% down, probably $4 within that time period. And that's still going to be a really good return. If we hit $4 within the next few years, that's still going to beat the market. That's still going to be a good investment. And, it's normal for these companies to dilute shareholders. That's the whole point that they go public, right? Why do they go public? Because they are trying to raise money to fuel their growth. And we see that they're doing just fine. They are going to keep improving their revenues, increasing their market share. So I don't mind getting diluted in this time frame. In the future, obviously, there's going to be chances for buybacks and stuff like that. But that's talking long term, very long term. So I still think it's a good buy. I will definitely keep buying. Palantir, just holding on to its gains. We'll have to see what happens with Palantir. I wouldn't be surprised or mind some consolidation in this area. If they do consolidate, it's going to be more buying opportunities for people who don't have shares into this company. In terms of Google, we can see that, well, first of all, I'm not a really big technicals guy, but there is merit in technicals because of algorithmic trading. And we can see that they got bought up huge on the 200 moving average. So are we going to see more downward pressure? Maybe in the short term. I wouldn't be surprised because of all the drama. And the thing is with Google is like, why is the DOJ trying to get them to sell Chrome? Because these monopolies are not the monopolies of the past. Like, they're not predatory on the consumer by any means. I'm a happy Google user. I use Google Chrome. Every time that I open up Chrome and I go to a new website, it lets me sign in with Google. And it saves me so much time, so much hassle. And I just don't see how selling Chrome is good for the consumer. It's just such a strange idea. I don't see how that benefits me or anybody else that uses Chrome or a Google account. I have no words. It's just so strange to me. So I definitely don't want to see them sell Chrome, like not even as an investor, but just as a user of Google. And yeah, it's so strange. I don't understand it. Like, out of all the companies, obviously Google is a huge one. It's Mag 7, but they're not predatory. I don't see how they're predatory. Obviously, if they increase their YouTube Premium, everything by like 100% price, then it's like, okay, now we have to reassess. But I think there's still value in the services that they offer, especially with the convenience of everything, how everything's just tied in. So yeah, I personally don't understand it. go after Ticketmaster, some of those really truly predatory companies. So yeah, overall we can see that the small caps still have room to grow because now they're just approaching their all-time high. And the thing is, usually small caps do track the S&P 500 in terms of their performance. There's just such a big disconnect that they're playing catch up right now, and this means that all of these small caps still have room to grow, still have a lot of potential. So yeah, I still see SoFi as good value at this price. It's not anything crazy. It's not beyond the fundamentals or anything. They've just, like I said, the ball has been held down for so long under the water, and now it's their chance to come back up. So everything past here is just fair game. It's fair game. So let me know what you think. If you think that SoFi still has room to grow, leave it down in the comments and subscribe if you haven't, and I'll see you guys next time. Bye.